Hello everybody and welcome to the psychology introduction here on Shadow Investors. I'm Exito and in this video tutorial I actually want to make you aware of how important psychology is. How and why most beginner traders fail and why 90% of the market loses money, basically. Then I'm also gonna be bringing to you how professional traders make their money and how they are thinking of the market. And this is a multiple video series, so I'm gonna get into more depth in the future videos, but this one is more for an introduction into this topic. So let's get on with this. Beginner traders' attitudes. Beginners or losers' attitudes. What they might think, what is right, and what they pursue to do to make what they think consistent money, which it really isn't. Making money as a trader is a function of analysis. This is what the beginner and losers are thinking, and this is not true. Making money as a trader is a function of execution. That means you could be the best analyst in the world, but you can still lose money trading because you don't have the psychological attributes to make a winning of trading, simply. There must be a way to trade without losses. That's what the retail thinks, or the most beginners think. There must be a strategy where I simply take no losses. And that is not the case at all. They could not be more wrong. There is no trader in the world that does not take losses. I know that for a fact. And you need to get that into your mind. You're gonna take losses and you need to accept them. This is so important. There is no way of trading without losses. No way. I wouldn't put on a trade if I didn't think it's going to be a winner. So they're implementing that they know what it's going to happen next. And if you don't think it's going to be a winner, they wouldn't put on the trade. And that is the wrong mindset. In trading, you are simply working with probabilities. And that's how you need to think of the market in terms of probabilities. And you don't need to know what's going to happen next in order to make money. Not at all. Yeah, like with the next quote, I need to know what happens next to win a trade. Let's tone this down for a bit. What do you need to experience a winning trade? What do you need? You need to be able to click a mouse button. Couldn't you just jump into the market, click buy, no take profit, no stops, and price goes in your way? You close the trade and have a win? Isn't that possible? Yes, it is. And that's that's a really conflicting point of you can make errors and still make some money, but in the long run you're gonna lose it again. Next point. The beginners or losers are blaming the market for their losses. That means we can simply look at this in a perhaps trending environment. If you are trending on a asset and they take a trade right here and say this is a good uptrend, this has to go more up, and then it goes down, they're gonna blame the market and say this should have been a perfect uptrend, but because everyone shorted or sold, the market betrayed me and that's why I lost the trade, not because I was wrong. And that's also the wrong mindset. You can't blame the market for a losing trade. You just simply can't. You are always being accountable for your losses. So you need to be aware of that. That's really, really important. The more I learn about the market, the easier it is to execute my trades. And that's totally wrong. There's actually an inverse correlation to that. The more you know about the market, the harder it gets to execute your trades flawlessly. That means when you have a trade idea and you have learned really a lot about the market, but you're still don't have the experience, you're gonna take your first profit really quickly, because that's where your next resistance is. Because you've learned so much about your market, you're gonna have lines everywhere. If you're doing technical analysis, for example. And that's why it gets harder to execute your trades the more you learn about technical analysis or the market. It gets harder. And that's why it's also important to keep things simple in your edge or your strategy. So let's move on. I hope this clears up your mind a bit. So now, attributes of losing traders. Why do consistently losing traders do what they do? Why do they lose? They don't define the risk before entering a trade. That means they have a setup, they enter their trade, they have no stop loss, no target. They're just saying to themselves, price has to go up here. Price has to go up. And that's also the wrong mindset. You need to define risk before you enter your trade. Because you're working with probabilities, and and you're basically trading sample sizes. And over a sample size of 25 trades, for example, you cannot know which one is a winner, which one is a loss. And we're gonna get into that more in depth in the next video, but this is just for introduction. So yeah, according to my risk management video that I made, you need to define your risk before entering a trade. What is the maximum amount you're gonna lose on that particular trade? Also really important. You can already tell psychology is, honestly, it's the biggest part of trading. Analysis is easy. It's not easy, but you can master it pretty quick. But the psychology, that's the real hard part about trading. Losing traders do not plan their trades. That's the first part. Usually, losing traders don't plan their trades. They don't define the risk, they don't define their take profit, and they don't really define their entry. They just look at price going up and say, oh, price is going up, I'm buying. And then, as it happens always, price dumps. They did not plan their trade out. And if they plan their trades, they plan their trades and never execute them, or they execute trades that they've never planned. Like in this example with the FOMO buy. And the other example with planned trades that never execute would be if you have a trade idea. Let's take the uptrend because it's just a nice example. Let's say now they have planned their trade that they are gonna buy here, have their stops here, have their take profits here. Price actually comes down and they don't take the trade because they're scared of losing money. Even though they define their risk and their take profit, they're still scared, and that is considered a trading error. Let's move on. Hanging on to losing trades. That's also with the stop loss, for example. If you have this trend and you have your stop loss right here, your entry right here, take profit. Market comes down and they move their stop losses because they think, oh, this trade has to work. This trade just has to work. And it goes down and down and down, and their loss is getting bigger and bigger and bigger. That's also a really big mistake losing traders do. Hanging on to losing trades. Moving your stop loss out of fear. This is an important one. Yes, you can move your stop loss if a specific criteria is met. But if you're moving your stop loss out of fear, let's say again, the trend, you have your stop loss here, price comes down to your entry, and then price moves down even a little bit more, and you say, oh no, this is probably not gonna work. They're putting their stop loss up, hits their stop loss, and yeah, mostly price moves up from there on. So your initial trade idea was correct, but you had fear of losing that money on this particular trade. That's also considered a trading error. not sticking to your plan. Not analyzing results or performance. And what that means is you have a P&L. I hope you know what a P&L is, your profit and loss chart, which on a profitable trader just goes something like this, consistently up with small drawdowns. And if you would track that P&L, you can come to several conclusions on why you are losing trades, why your strategy is not working. And even if they would analyze their results, they would find out that their average winner is smaller than their average loser. So they're losing money, of course. Not having a strategy or an edge, it's the same, which can be explained in a few sentences. And that's where it comes back to keeping it simple. Yes, you can have really, really complicated strategies, but the best strategies are the ones you can explain in a few sentences. So you can keep it simple and not confuse yourself to make trading errors or to second guess your trades, because you simply can't do that if you have a strategy. So yes, you need a strategy or a edge in trading. You need that. That's mandatory. Now let's get to the attributes of a professional trader. They are having a defined edge or a strategy. This is what you need. For example, I'm gonna buy the retracements in an uptrend. They're always gonna buy this. Even if it turns around, they're still gonna buy this. They're gonna take a loss. That's no problem, because they had 3 wins in advance. Just for an example though, just for an example. They have a defined edge or a strategy, which they can put in a few sentences. They are planning their trade setup before it happens. So again, we're taking the uptrend. They are now, at this point, they are planning, okay, I'm gonna buy here on this retracement. I'm gonna have my stop loss here, gonna have my take profit up here. And if price reaches, then they execute without any doubt or fear, because they work with probabilities. This could be a winner or a loser. You simply do not know. Planning the trade setup before it happens, and not simply just having no plan and then buy the retracement out of fear of missing out maybe, or whatever it may be. They are planning it. Planning. They execute trades without error. And this is again with errors are moving stop losses up or moving stop losses down. Whatever it may be, they're executing their exact plan without error, and they're sticking to it with no doubt. Unless they have a criteria in their strict strategy which defines moving a stop loss or taking more profits or whatever it may be. You need to have strict criteria for all of this. They are moving in and out of trades with ease or with no fear. And again, you don't move your stop loss because you're fear of losing that trade. They're just easily, like, it's, what should I say, waking up in the morning, making a coffee. It's the same ease of doing that than with taking this trade. You need to be at the same ease. Gotta do it without any fear, because you don't have anything to fear about, because you've defined your risk, you have an edge, and you planned your trade setup before it happens. And with these criteria, you are you simply cannot lose, or it's really hard to lose money if you have these criteria met. So I hope you enjoyed this psychology introduction. This is just really an introduction. I'm gonna go way more in depth on how you can implement some of these strategies and attributes of professional traders, how to do it specifically, what do you look for in your strategy, how do you develop a strategy in the first place, which, yeah, could be really hard. And you really need a couple of things to be consistently profitable like a professional trader. Yeah. Hope you liked this introduction, and I'm gonna sign out again. See you in the next video. Peace.